Over the last 5 lessons, Ellie has learned about different types of profit. And each type of profit tells her a story about how her business is performing. So let's have a look at a statement of comprehensive income one last time. The statement of comprehensive income begins with revenue. And the revenue is the money coming in from sales. Ellie then has to pay her cost of sales, the direct cost of making cupcakes. So the money coming in, subtract the direct costs of making cupcakes, and Ellie gets her gross profit. Her profit after direct costs. Next, Ellie has to pay her operating expenses, her everyday costs. Things like rent and staff and insurance. Ellie says gross profit, take away her operating expenses to get to her operating profit. And this is the profit after her operating expenses or everyday expenses. But Ellie bought a new oven, and the interest on the oven cost her £2,000, or her finance cost. So Ellie then had a gross profit for the year of £40,000. Okay, so that was her profit from her business. Her accountant then worked out that Ellie needed to pay £8,000 in corporation tax, and corporation tax is the tax paid on the business's profit for the year. So Ellie was then left with £32,000 in profit after tax, and that was the profit that she got to keep. She could reinvest it in the business or save it, or she could take some of it out. It was the tax that was available to keep. It was hers for either herself or for her business. So remember, as we move down the statement of comprehensive income, we are deducting or subtracting different categories of cost. And every category of cost tells us a different story about how the business is performing. It provides us with some information about the business's performance. If the direct costs are too high, you're going to have a lower gross profit. If the overheads are too high, your operating profit is going to be lower. If you've got your finance costs are too high, then your profit for the year is going to be lower. It tells us a story about her business. It tells us where the money comes from and then where the money goes to, and how much finally the business or Ellie get to keep.